Okay, good morning, everyone. I'd like to welcome you all to the Daily Energy Markets podcast. It's great to have three of our regular speakers here with us. Niamh McBurney, Associate Director at Control Risks, Andy Lavin, Managing Director at Econs, and Victor Yang, Senior Analyst at JLC. Great to have you all back. Hope you had a good break over the summer. Victor, let me go to you first. Give us your take. We've obviously had a big weekend now in China with President Xi hosting bilateral, trilateral meetings. We have, as you were mentioning earlier before we went on air, a weapons military parade today. What's behind all this? Has President Xi has he got a new lease of life, having hosted a couple of Putin and who did he host? I've had a complete blank. Modi
Korea,
over the weekend. Give us your
yeah.
take on that meeting. What does it mean for China? What does it mean for the region?
Well, it's quite an important day for China today. And we had the military parade to memorize the 80th anniversary of the winning against the Japanese aggression and the fascist 80 years ago. And now it's not just to remember the history, but it's also to ensure that we had the power to maintain peace, to keep us safe now. So we see a lot of new weapons today. And most of the weapons displayed today are completely new to the public, even to military experts, outside the military. And so for the country, apart from the weapons, more leaders joined in China, and such as you said, Modi from India too, and Putin, and the president of North Korea, and so on. So this is a great opportunity for them to discuss cooperation in the future. And it's a great opportunity too for this country. So we are expecting more cooperation between China and these countries, including with India. We can see from Modi's attitude towards China is different this time. Last
Yeah.
time during a summit, India refused to sign, but this time it's more cooperating. And so we see this improvement. So this is a great sign for the country and for a lot of countries too. Yes.
Okay, thanks, Victor. Niamh, let me
Yeah.
go to you with that. How much of this is to do with oil? Because, obviously both India and China are big consumers of oil. Russia obviously plays a part in supplying both of those. We have a headline today, Russia also to boost gas supplies to China, signing a new pipeline deal. Is this about energy and economics, or is it more than that?
I think it's both. And energy is a really important part of the political game that all of these leaders are playing, that all major political leaders are playing at the moment. Whether that's President Trump in the US himself or everyone reacting to him. But no, energy is an incredibly important component of the trilateral relationship between Russia, China, and India. And I think it's fair to say that given the environment that we're in, it'll probably become an even more important part of the relationship going forward.
But so of course it's an important relationship, energy, but if you put sanctions into that, obviously you've got the stronger sanctions on India for taking Russian oil in terms of tariff addition there, and also China has been reducing some Russian intake, hasn't it, in the last few months. Do you see us continuing on that trend, or will these two consumers become a bit more defiant as time goes on? I mean, are we going to see a change in actual intake and impact of sanctions?
I think there's a couple of components to that. The first is price. If the Chinese can get Russian crude at the price they like, they'll take it. But obviously, the sanctions environment that overarches all of that does make it more difficult. The other component here is what happens with Iran in the UN Security Council. Do we have the reimposition of UN sanctions against Iran? And then also, is the US going to make it even more difficult for buyers of Iranian crude, illicit buyers of Iranian crude, to be able to offtake it? So yeah, a couple of things in the mix there that I think will keep us all guessing for the next few months at least.
Okay, thanks very much, Niamh. Andy, good morning and welcome back again. Let's go to you for a bit of a big picture supply demand, sentiment that you're getting. I mean, we've talked to a few people this week as we've come back, and the overall impression is there is this oversupply situation. Demand is probably going to falter a bit more in the fourth quarter globally, whether it's from China or even US economy beginning to show signs of strain. Are we in a situation of ending up with oversupply by the end of the year?
I think that's very a big possibility. There really is no issues in terms of supply. The challenge is all about, is the demand going to maintain and potentially grow, or is it just going to be very stagnant? The big challenge, which kind of comes back to your question to Niamh, is part of the problem is that the supply isn't actually in the right places, because we've got such a big geopolitical hand in terms of sanctions, in terms of pricing, in terms of relationships between countries, that you can start to see oil and products going to places where it doesn't actually economically make any sense. So the hand of geopolitics is pushing flows in directions which, frankly, in the long term don't make any sense. So your challenge is oversupply and the wrong type of fuels and going in the wrong places, making the economic picture look very, very difficult for people to rationalize. And none of that brings a lot of confidence to the market.
But what do you mean going to the wrong places? Do you mean into storage, for example?
Well, no, you just look at Russian oil, right? Russian oil is a classic example. Why was it that Russian products were going into Europe? Because it was the cheapest, right? It's not now, it's going somewhere else. Therefore, it's going somewhere where it is more expensive. But actually, the price cap or the attempts at a price cap means it's cheaper, but it can't go where it was meant to go, which is Europe. It's going somewhere else at a cheaper price. So the economics of the whole scenario doesn't work. And I think to stand back and look at the globe in that context, you can see that in terms of a lot of what's going on around the sanctions, not the sanctions, the tariffs from the US. They're also forcing movements and flows that wouldn't have happened absent a political influence. Yeah. I was reading articles over the weekend about Europe is now seeing a flood of the kind of Shein, Temu type products coming out of China because it no longer makes sense for them to go to the biggest market they used to go to, which was America. Yeah. Again, that in the long term, that's unsustainable. So the market, in terms of positivity, needs to see signs that actually it's a robust market. And what we're seeing is signs that this is not a robust market. It's complicated. It doesn't fit the economics, and therefore something has to change.
Okay, thanks, Andy. Victor, let's go to you about to China. And Andy was just mentioning Temu and a few of the Chinese shipping sort of online retailers, etc., who are facilitating the transport and distribution of consumer goods. Give us your take, Victor, on the outlook for China and the Chinese economy for the rest of the year, from a manufacturing demand point of view, what's being asked of China in terms of export, and how and what expectations might be, for example, for more government stimulus.
Well, and as we see, the trade with the United States has been declining quite dramatically this year. And the country has diversified its markets further, so we do not rely as much on the United States as before.
Do you have any figures for that, Victor? Do you have any, like up to the first half of the year, how much lower was it compared to the year before, for example?
The trade with the United States dropped by, in the first 6 months, I think it was over 30%, I think. And regarding crude imports in June and July, the country did not import any crude from the United States. And in the past year, well, sometimes the imports could be over, well, 200 kbd. Yeah. And so it's a long-term trend to cut imports from the United States and to reduce the trade, exports, including exports to the United States. So this is a big challenge for China too. And it needs to tap more markets and to increase trade with other partners, including the EU. Yeah.
And is it,
So-
and any plans for more stimulus in the immediate sense?
Yes, well, say for the oil markets, for instance, the countries now has just rolled out some policies to eliminate more capacity, and including CDUs with over 20 years of age. And as for the stimulus, such as the opening of Hainan province to the international world, is now going to release Hainan to world trade as an boundary zone. Say this is would be regarded as a customs trade zone as from December this year, and it will exempt tariff from a lot of countries, a lot of products. So this is kind of opening further to the world.
Yeah, and everyone is busy creating new markets and new trade relations. Niamh, you mentioned Iran earlier. Let's talk a bit about that, but I wanted in the context of, regional stability, geopolitical risk in the Gulf. Things have, as you said, quietened down over the summer after the June shenanigans. From a shipping point of view, do you see any indications of nervousness again? Any resumption of more traffic through Suez? What is the mood at the moment, would you say, in the Gulf of Aden and through to Suez in that context?
The mood is one of almost trepidation. It's our expectation that we're going to see another bout of military activity between Israel and Iran at some point in the next couple of months. There's a few triggers that could prompt that sooner. There's a few triggers that could prompt it later. But it's fair to say that the phrase that comes out of the conflict in June is unfinished business. And Israel ultimately is unhappy with the state that it left Iran in, although there was a considerable amount of infrastructure, and particularly energy infrastructure, that was impacted in the war. But nonetheless, even though Netanyahu says publicly that he's happy with the outcome, in order to indicate to Trump that that's it for now, clearly, like militarily, that is not the case.
But wouldn't that require the US? I mean, what we saw in June was clearly all choreographed, planned, and agreed to with the US, clearly, and with their involvement as well. Would that not be necessary again? Or are you saying Israel could go solo?
We think kind of the next round of military confrontation would be smaller, more contained, and probably carried out by Israel alone. It wouldn't be as big as the June conflict. That's our expectation for the moment. That Israel did such an effective job during June at undermining Iran's ability to defend itself, which had been weakened by its overall strategy in the region over the last 30 years, means that Israel doesn't need to go so big again. So it's going to be an interesting couple of months. But when it comes to kind of the shipping, traffic through the Gulf has resumed. No problems there. We are seeing some increased activity in the Red Sea by the Houthis just in the last week of Yemen, causing trouble there. Going after with a ballistic missile an Israeli tanker. It wasn't impacted. They claimed it was. There was another attack claimed yesterday against a tanker. What was important about the first attack last weekend, though, against the Israeli-affiliated tanker, was that it hit off the coast of Yanbu, which is much further north than the Houthis would normally look to go after ships. We have seen a consistent movement through Suez. Obviously, it's kind of operating at about 20% of normal levels, but that's been consistent since the beginning of the year. Once the market kind of felt that there was a bit more security, but within this in the last week, this potential shift in their tactics, and we think it is starting to turn into a trend that could pose some operational challenges for the shipping industry. So we could start to see a decline off in movements through Suez if that continues, and that's a big
Okay. Okay. Andy, let's talk a bit about, back to sort of supply, but OPEC specifically, and then focusing a bit on Saudi, because we have a headline today, low oil prices force Saudi Arabia to tap more debt. That's not a problem for Saudi generally, because it has a good collateral, let's say, to tap the debt markets. It doesn't have a problem with that. But of course, it is pledged along with OPEC to add oil back in the market. We're very quiet over the summer, no changes in tone there. Prices hovering in the late 60s. Any sentiment there on whether you think Saudi would want prices higher, and would they act accordingly from an OPEC point of view, do you think, if they needed to? Oh, you're on mute, Andy.
That's the, $64 trillion question, I guess. I think the Saudis would like to have more revenue. Most of OPEC Plus would like to have more revenue. The challenge is, in the complex market of today, how do you make that happen? And I think what we saw before the summer was essentially OPEC putting out some changes and just waiting to see what happened to the market.
Yeah.
And I think that the impact in the market was probably not as bad for OPEC as it could have been. Prices were not impacted as much as they could have been. And therefore, what they're waiting to see how the geopolitics of the whole global economy start to create trends. I mean, trends are really important, because that's when you can start to think about what you do. So I think what you'll start to see them do is now we're starting to come back after the summer, they start to talk about maybe putting more production back on stream, more exports, and just seeing how it starts to make the market react, because I think it's unquestionable they would like to have more revenue. It is difficult to see how they can get that from pushing prices up. It's more likely that they will kind of, how do we put more product in the market and get more revenue that way? Because if they start cutting, you're going to have Trump on their case saying you're pushing prices up, you're destroying the economy. So I think you'll see them starting to slowly open the taps up again, trying to feel out how much they can push it, how fast can we push it without really seeing the downward pressure on prices.
Yeah, the commitment to increase those volumes in the plan, like sort of 1 year, 18-month plan, that does seem slightly more sort of set in stone. That's the feeling we'll have, rather than they're going to switch things around every 2-3 months. Victor, back to China. What does oil refined product demand from the region tell you about the health of other economies around China that China is obviously exporting to as well from a refined product point of view? Is there a positive sentiment there? Have things slowed down? What's the outlook for the fourth quarter in terms of refined product exports there? And I mean, what's the latest with quotas given to those refiners from the government?
Well, the market is now waiting for the last batch of quotas for this year. Actually has been waiting for weeks, to say so.
Okay.
Because there have been rumors about how much quota the country will release for the last quarter, the last few months. And now we are still expecting to see this batch of quotas to be released next week. Not yet, next week. And some would expect the quotas to be over 10 million metric tons for clean products. I mean, gasoline, diesel, and jet fuel. And we also expecting quotas on low sulfur fuel oil too. So it's kind of, well, great focus of the market at the moment. I mean, the quotas now. And for the country, the gasoline and diesel demand has dropped this year domestically. And we can see from Sinopec's and PetroChina sales in the first half of the year too, they recorded drops in the overall sales in the first 6 months. But we do see a modest growth in the country's crude runs because of the growth in chemical production, chemical demand. Yeah. So for now, we do not see a drop in the country's crude run in the first few months, but we are expecting to see a modest drop in the last few months because, say, for instance, Sinopec is going to cut its annual throughput for 2025. At the beginning, I mean, in March this year, it planned to boost its crude runs by 2.7 million metric tons. But now, according to its interim report, it's going to cut this plan because of the drop in demand. Yeah,
That's
and
interesting.
PetroChina too. Yeah, PetroChina too is going to cut its annual throughput.
Okay,
And
they're
so we
having to
see,
adjust. They're having to adjust their initial predictions and forecasts on what they thought would be the case.
Yes.
There's our survey question for today. What impact will the much anticipated restart of the Fed rate cuts cycle at the end of September have on oil prices? Will it be bullish, bearish, or neutral? Some commentators this week telling us, of course, it'll be bullish because it pumps more liquidity and acts bullish for everything. And oil has to catch up even with other commodities. Niamh, we have a headline in our bulletin today. Libya opens its oil fields and the world is taking notice. What's the latest with Libya? Again, certain countries which used to produce a lot of headlines have gone quite quiet. Are things looking a bit calmer there, or and our IOC is going to really venture back in?
So on the political and security front over the last while, kind of about 9 months, there has been an improvement. There are two separate governments that function in Libya, one in Tripoli, one in Benghazi, and I mean they are not friends, but they have sought improved accommodations with each other, which has lowered the political temperature and reduced the kind of security instability that we've seen for a very, very long time in Libya. And so that has inculcated an environment where IOCs are definitely and have been for a couple of months looking at re-engaging with it as a country, because obviously its potential is considerable, has been for some time, and it's been quite a disappointing underperformer for the better part of 10 years now really. So so we know there's a couple of IOCs that are re-engaging. There's also a kind of geopolitical component to this as well. The Italians have been pretty forthright under Giorgia Meloni at re-establishing their relationships with Libya. That's both from managing a migrant flows kind of angle, but it is also energy as well. The Italians are very, very keen to be first movers when it comes to benefiting from improvements in Libya's energy production and being able to offtake supplies there. So the Italians have as a result of that been quite supportive to help stabilize the overall environment as well, undercutting maybe the Spanish and the French there when it comes to European dynamics. But yeah, there has been an overall improvement, but really it's going to be quite a while before we see the kind of political stability I think that we'd all like to see, to be able to see Libya return as like a kind of functioning member of OPEC.
As a major player. Andy, there's a bit of chat there on the group chat about Iran, again, following up from Niamh's comments that Israel could possibly target again the next couple of months. And you mentioned regime change in your comment. But Andy, I wanted to go to you just on, you'd also mentioned sort of Iranian crude and what sort of, again, what indications you're hearing about out there. There's another headline today saying that Iranian crude is being disguised as Iraqi crude because of sanctions. I mean, is that really the case, do you think, or is that just a sensationalist headline? And Have you seen, in terms of the figures that you might run across, any change really in flows because of sanctions?
Iranian crude and products has historically been flagged as Iraqi products in different ways for a long time now. I think sometimes the West is a little bit arrogant in thinking that their sanctions are all powerful. And what you end up doing is you create an environment where people become extremely good at doing things that you wouldn't guess they were doing and coming up with ways to get around sanctions. You can see that even with the Russian sanctions as well. So I think it will always make it difficult, but not impossible for people to export. And I think the other challenge, and you saw that yesterday with Narendra when we were talking about Russian oil.
Yeah.
Not everybody has sanctions, and it is very difficult for a country to enforce their sanctions on some other country when that country doesn't have the same sanctions regime. And in that instance, actually, you've got a willing customer, a willing seller. So
What about the
absence the whole
secondary? I mean, the concept of secondary sanctions, which is obviously that layer that is a bit more delicate, but it was impacting China, for example, for a while this year in terms of Iranian crude.
that secondary sanctions are. I'm not quite sure I can respond to that in a politically correct and sensitive way. So what I will say is that as a British citizen, it is illegal for me to be forced to do something by a third party country that is not aligned with Britain's interests.
Yeah.
Right. So secondary sanctions are very, very challenging. Right. And it is a bit being the bully in the playground. Well, if you're not going to play football with me,
Yeah,
I'm not going
yeah.
to
I
play
mean, they
with
can
you.
catch people out in
Right?
different ways, can't they? Yeah.
Exactly. So you know, when the West went to more of blocking flows of funds, blocking access to insurance, that's a much, much stronger way of doing things. But all that does is force people to go into different routes, like we've seen with the Dark Fleet in Russia. Fine. Well, we'll get insurance in a different way. It's really, really challenging. So I don't think that Iran is ever going to stop pushing crude and products into the market. It will have to probably increasingly go to extreme lengths to hide it or to be selling to willing buyers.
And why would it? I mean, it's the only source of revenue they've got, and there's
Exactly.
certainly no positive outlook for lifting other economic sanctions off the country. So more of the same, it seems, is what we should expect.
Absolutely.
Victor, let's go to you to wrap up, and just get your take on the property sector in China. We have, obviously it's still in recovery. There's still oversupply, I assume, and in parallel we have this very well performing stock market this year that's done well, which shows that people are feeling a bit more confident. There's a bit of consumer confidence there, but not into the property sector, correct? And is the government, I suppose, burden feeling any lighter these days from trying to resolve the problems in that sector?
Well, the government has not rolled out any strong policies to stimulate this sector this year. And in some places, well, some local governments had rolled out some policies, but not very strong ones. For now, it's better than last year, but people are not that willing to, not many people are willing to buy houses yet. So they still lack confidence in the future because, well, we're seeing the price is still too high. Yeah, it's still too high to buy at the moment. So unless it becomes more, reasonable, the price. And so we do not expect the government to roll out very strong stimulus like a few years ago to bail the market out. And we still see jobs in investment in this industry this year, but not as sharp as last year. So it's kind of tending to stabilize now.
And do you see a 5% GDP growth in China at the end of the year?
Yes, the
achieved?
government can can roll out more policies to try to achieve this target. And it is kind of difficult to maybe just about that much, but not exactly maybe. And we are looking at the last few months. We had kind of, well, the tariff is still a big challenge.
Yes.
And there's still a lot of uncertainty. So the trade, the export face a great challenge. So there's a big uncertainty.
Okay, yeah, tariffs are still obviously very uncertain and being worked
Yeah.
out. Thank you so much to Victor and to Niamh
Yeah.
and Andy today for joining us, and have a great remainder of the week, everybody. See you soon.
Thank you.
Thanks, Diala.
Thanks, bye-bye.
Thank you. Bye-bye. Bye-bye.